Hello, everyone. Welcome to the market opening bell for Friday, September 26, 2025, your 10-minute guide to the stock market. The Hang Seng Index opened 17 points higher, climbing 121 points to 26,640 in the morning session, before dropping 115 points to 26,403 in the afternoon, ultimately closing down 33 points or 0.1% at 26,484. The Hang Seng China Enterprises Index edged up 1 point to 9,444, while the Hang Seng Tech Index rose 56 points or 0.9% to 6,379. Total market turnover reached 314.8 billion Hong Kong dollars. Southbound trading through Stock Connect recorded a net inflow of 11.46 billion dollars into Hong Kong stocks, with significant net purchases in Alibaba at 4.632 billion, Tencent at 1.111 billion, SMIC at 958 million, Kuaishou at 462 million, Horizon Robotics at 339 million, SenseTime at 277 million, Hua Hong Semiconductor at 195 million, and Meituan at 184 million. Conversely, net sales included Xiaomi at 802 million and XTELPI at 120 million. Data shows southbound funds have bought Alibaba for 25 consecutive days, totaling $69.385 billion. SMIC for 5 consecutive days, totaling $2.56 billion, while selling Xiaomi for 3 consecutive days, totaling $1.145 billion. Technically, the Hang Seng Index is consolidating between 26,000 and 27,100 points. In mainland China, the three major A-share indexes opened lower, but showed mixed performance, with the Chinex Index briefly rising over 2% before pairing gains. The Shanghai Composite Index closed nearly flat, down less than 1 point or 0.01% at 3,853, with a turnover of about 1 trillion yuan. The Shenzhen Component Index rose 89 points or 0.7% to 13,445, and the Chinex Index gained 50 points or 1.6% to 3,235. Combined turnover for Shanghai and Shenzhen markets reached 2.371 trillion yuan. The renminbi's US dollar central parity rate was lower by 41 points to 7.1118. Xiaomi held a product launch on Thursday, unveiling 3 new smartphones: Xiaomi 17, Xiaomi 17 Pro, and Xiaomi 17 Pro Max, set to go on sale in mainland China on September 27 at 10 a.m., with the Hong Kong launch date still unconfirmed, and rumors suggesting the Xiaomi 17 Ultra may debut in December. Both Xiaomi 17 Pro and Pro Max feature Qualcomm's 5th generation Snapdragon 8 Elite platform, claimed to be the world's fastest mobile SoC. The Xiaomi 17 Pro is priced at 4,999 yuan, while the Pro Max price remains undisclosed. At the 2025 Lei Jun annual speech, Xiaomi's CEO Lei Jun emphasized chip development as critical to success, committing to a 10-year 50 billion yuan investment in self-developed mobile SoCs. In the automotive sector, Xiaomi plans to launch electric vehicles in Europe by 2027, scouting showroom locations and potentially manufacturing locally. Sales staff report efforts to shorten EV delivery cycles, with some models potentially delivered up to 2 months earlier than planned, driven by production capacity reaching 36,500 units last month. JD.com saw its stock surge 7.2% intraday to $142.6, hitting a 3-month high, and closed up 3.5%. At the Enjoy AI JD Discovery 225 Global Technology Explorer conference in Beijing, management announced a 3-year AI investment push to drive a trillion yuan AI ecosystem, opening scenarios and data to support embodied AI model training. JD.com also plans to launch a new app enabling voice-activated shopping, food delivery, ticket booking, and hotel reservations. U.S. mining giant Freeport-McMoRan announced a mining accident at its Grasberg mine in Indonesia, the world's second-largest copper mine, where wet mud flooded tunnels, leading to a temporary production halt. Third quarter copper and gold sales are expected to decline with only minimal output and sales in Q4 2025. Production is set to resume in stages in 2026, with copper output projected to drop 35% from prior guidance, and full capacity not expected until 2027. Combined with other global mining disruptions, this has pushed copper prices to a 15-month high. Hong Kong-listed copper stocks rallied, with MMG up 8.9%, Jiangxi Copper up 7.7%, CMOC up 11.7%, and Zijin Mining up 5.1%. Its market cap reaching 724.77 billion yuan, breaking the US$ 1 billion mark for the first time, trailing only BHP and Rio Tinto. US President Trump signed an executive order on Thursday approving a TikTok deal to continue US operations, pending Chinese approval. A new joint venture will manage TikTok's US business, with Oracle's Silver Lake and Abu Dhabi's MGX holding about 45% of shares. ByteDance retaining 19.9% and the rest held by existing and new investors. The White House warned of potential mass layoffs if the US government shuts down next week, as the fiscal year ends on September 30. A Republican proposed short-term funding bill passed the House but lacks the 60 votes needed in the Senate, where Republicans hold 53 seats, requiring at least 7 Democratic votes. US stocks fell for a third consecutive day. The Dow Jones Industrial Average dropped 173 points, or 0.4%, to 45,947 after falling as much as 336 points. The S&P 500 fell 33 points, or 0.5%, to 6,604, and the Nasdaq dropped 113 points, or 0.5%, to 22,384. The Nasdaq Golden Dragon China Index, tracking Chinese ADRs, rose 36 points, or 0.4%, to 8,665. Tech stocks showed mixed performance, with Intel surging 8.8% on reports of investment or collaboration with Apple and TSMC, while Apple rose 1.8%. Tesla fell 4.4% and Meta dropped 1.5%. Facing potential EU fines of 6% of global revenue for failing to remove illegal content. Oracle fell 5.6% after issuing $18 billion in bonds, with subscription up to $88 billion, with one 40-year tranche priced at 1.37% premium over comparable treasuries, below the guided 1.65%. Oracle's long-term debt stood at $95 billion as of August. AI chip stocks face pressure, with Micron down 3% and ARM down 2.5%, while Nvidia edged up 0.4%. Starbucks announced a $1 billion restructuring plan, including closing some North American stores and cutting about 900 jobs. With a projected 1% decline in 2025 store numbers, its stock fell 0.5%. Costco reported quarterly adjusted earnings of $5.87 per share, beating expectations of $5.8, with revenue of $8.62 billion, slightly above the $8.6 billion forecast. But same-store sales growth of 5.7% missed the expected 5.9%, with shares stable after hours. The US economy grew at an annualized rate of 3.8% in Q2, significantly above the second estimate of 3.3%, marking the strongest growth since Q3 2023, driven by personal consumption expenditures, revised up to 2.5% from 1.6%. However, Q2 corporate profits rose only 0.2% to 3.259 trillion US dollars, below the initial 2% estimate and following a revised 0.6% decline in Q1. August durable goods orders rose 2.9% month-on-month, reversing July's revised 2.7% drop and beating expectations of a 0.5% decline, driven by a 7.9% surge in transportation equipment, particularly defense aircraft and parts up 50.1% and non-defense aircraft and parts up 21.6%. Initial jobless claims for the third week of September fell 14,000 to 218,000, well below the expected 235,000, marking a 2-month low. Our stock pick today is BIOCYTOGEN Pharmaceutical, stock code 2315. BIOCYTOGEN Pharmaceuticals is a global biotechnology company dedicated to the research and development of novel antibody drugs and preclinical research services. Headquartered in Beijing, it has branches in China, Haimen, Jiangsu, and Shanghai, the United States, Boston, San Francisco, and San Diego, and Germany, Heidelberg. Leveraging gene editing technology, the group utilizes its proprietary randomized platform to discover fully human antibodies and has established the 1,000 mice 10,000 antibodies technology platform. This platform has built a library of over 1 million fully human antibody sequences, targeting more than 1,000 targets for global collaborations. The group has established model animal production centers, including 3 animal facilities covering approximately 55,000 square meters. These large-scale facilities enable the company to maintain an extensive range of genetically engineered mice, disease mouse models, and aged small animals with significant cost advantages. The group has achieved out-licensing collaborations for multi-clinical stage antibody molecules. Its sub-brand, BioMice, offers thousands of ready-to-use animal and cell models while providing preclinical pharmacology, efficacy, and gene editing services to global clients. In the first half of 2025, the group recorded operating revenue of 621 million yuan, a year-on-year increase of 51.3%. Net profit reached 48 million yuan, achieving a turnaround from losses in the prior year and surpassing the full-year profit level of 2024. Net cash inflow from operating activities was 203 million yuan, with a net cash flow of 33.3 million yuan, reflecting a comprehensive positive cash flow. Through years of strategic planning, the group has built a dual-driven business ecosystem comprising preclinical products, services, and antibody discovery. These two segments achieve mutual empowerment through technological synergy and resource integration, continuously unleashing growth momentum. In first half 2025, the preclinical products and services business, centered on innovative animal model cells, generated revenue of 458 million yuan, up 56.9% year-on-year, with a gross margin maintained at approximately 70%. The antibody discovery business recorded revenue of 162 million yuan, up 37.8% with a gross margin of around 90%. As of June 30, 2025, the group has signed approximately 280 agreements for therapeutic antibodies and various clinical asset co-development, licensing, and transfer deals. It has also established randomized platform licensing collaborations with partners including multiple multinational pharmaceutical companies, MNCs. In first half 2025, the group signed around 18 new contracts, a year-on-year increase of approximately 60%. Moving forward, the group aims to increase the transfer of PCC preclinical candidate molecules to secure higher upfront payments, milestone payments, and sales royalties. The group continues to expand its overseas markets, achieving rapid growth with overseas revenue of 421 million yuan. Meanwhile, the recovery of China's biopharmaceutical industry has driven increased R&D demand, enabling the group to meet client needs with innovative and high-quality products and services. Domestic revenue in first half 2025 grew rapidly to 199 million yuan, suggested buy price 29 Hong Kong dollars, target price $32, stop loss to $27.5. I do not hold the aforementioned stock.